Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so here we got Bitstamp, 4-hour chart, and I'm looking at Bitcoin here. And just like we spoke about yesterday, we basically flipped over the parabolic SAR right here. And after that, that was indication that we would likely get an attempted retest. If we failed to take out the parabolic SAR and flip it back over to the green side, then we would expect a sell-off retracement of at least this previous move right here, which we did. We sold back off, came down below, almost touched the 21 moving average. We were able to get back above the 8, but we were already skeptical once we closed below the 8. We're looking for an open and close as essentially confirmation that this move was definitely going to be retracing. We also had confluence with 2 red histograms here and flipping the slope back over red, and then once again we're in the bullish control zone, got the hard sell signal, and we're looking for the bullish control zone to exit and the slope to flip over red as well. So once we got 1, 2, 3 closing below the moving average, 4 taking out the parabolic SAR, all 4 of our indicators were essentially telling us that we're going to be getting a retracement. So what we expect then is a move back up to the parabolic SAR to attempt to flip it back over, at which point we enter our short position once we start to show weakness. So here we took the short out and currently short in the market. We did then sell back off, got the close once again below the red 8 moving average, and then once we got the open and close below it, we knew once again that this move was looking extremely likely to sell off. So when it retested back up to the 8 and then found resistance at the 8, we added to our position, at which point in time we did get a little bit of a violent sell-off. It got bought back up, but it still closed below the 21 moving average. So once we close now below the 21 again, we expect once again a push back up to attempt to save the move to the 8, which is what we're getting right now. We are now currently below the 8 and starting to sell off. We have about 38 minutes left until this 4-hour candle closes. We would expect it to close below the 21, at which point in time we'll expect this move to finish out at least down to the 50 or 55 moving average accordingly. So our target's still here at 15.6 or 15.477. At which point in time we would expect the same thing to happen. Find support here, get an attempted move back up, try to cross these back over, and it just goes over and over again. But essentially what we're looking for is a move like this. It would sell off more violently, come down to the moving average, and then try to push back up and cross these back over. Now if it gets up to here and then fails again and starts to sell back off, we would expect it to come down to the 89, which is going to put us down here at about 15,000. If we find support and then move back up, then we'll have to play that accordingly. But what we're looking to take place here, we're looking to see, are the 8 and 21 going to cross to the downside? You'll see here we save the cross, here we save the cross. We're looking to see, are we going to be able to save the cross here? So those are our targets on the short term coming down here. Long term to the downside, if we did get the sell off, we would expect it to come down to the 200 exponential or 200 simple, which is going to be somewhere in like the 14,000 range, like 13.5 to 14.2, depending on like how long it takes to get there. If we get a move back to the upside, we would expect a retest to the top of the range back here at 16.468. We do need to be very careful. Typically, Saturdays especially are bullish. Weekends in general are bullish, and then tend to sell off like on Sundays, back in line with spot before the markets reopen. But we're at a very high price action right now. We are at the top of a range, and we are clearly losing momentum. We've attempted to essentially like retrace and cross these back over. We try to cross it back over once to the downside, twice to the downside, 3 times, 4 times, 5 times basically. This is our 6th attempt to the downside. This move is very overextended. I'm not seeing what I would like to see out of the market to make me think that this is like a reliable and likely move to be able to like be sustainable over time. If we could get a legitimate sell-off at some point in time, retest, a Fibonacci retrace, I would be much more bullish on this move like long term. But at this point in time, we essentially came back up from like that $4,000 range, that hard sell-off in March, and we have had no legitimate retracements, which is the last thing I like to see, because I like to always see us building support as we move up, like stair steps of solid support, where we break down, retest an area, it holds, we move up, we break down, retest an area, it holds, we move up, and I like to see at least like Fibonacci number retraces. So 382.5, 618, depending how bullish the market is, at least a 382 or a .5 retrace is pretty much what I require to be like consistent. Now if we switch this over again to the daily, we will see once again all we did was essentially just come down and retest the 8 moving average. If that fails, what we're expecting is to essentially come down and test the 21. If that happens, we tested it one time before, attempted to come down and flip the parabolic star over, and then immediately took it out. If we come down here and test the 21 like I'm expecting, we would take out that parabolic star, and then once again we would start looking at like the legitimate retrace zones. But just like I was saying, we essentially took off from this like $3,800 range down here, and we came all the way back up and never retested anything substantial. So essentially, at some point in time, I would expect the price action to come down and touch the 200 moving average, and we haven't even got close to it. This was the closest we got back here when we came down below 10,000, and that got bought back up. So at some point in time, I'm expecting this to retrace to the 200 moving average. So it doesn't have to be right away. It could be longer further down the road. But we stair step these moving averages one at a time down. And if we just throw up a quick Fibonacci, we can take a quick look at that and see what our Fib targets would be. If this was going to be our high, which is obviously way too early to tell at this point in time, you'll see we have a ton of room to the downside to still keep this as a bullish move. We could literally come down and retest the 236, which would be the previous top area right here, and that would put us at 11.6. That's like a very likely area minimum retrace for a large move like this. The 382 would be a little more likely if we were going to retrace this whole entire move, and that would put us down here at 94.97. If we were to find support there at the 528 moving average and the 382 of the Fibonacci, and then get a move to the upside, I would be extremely bullish on this move over long term. Basically coming down, finding solid support, holding. First the 236 would line up with this high right here, then the 382 would line up with this high right here, and then worst case scenario the 0.5 would line back up with this resistance area back here. I don't think it's likely if we're going to get continuation we would make it down necessarily to like that 8,000 range, but anywhere in between the 382 and the 0.5 would be much more reliable to me, much more likely that we get continuation to the upside. Now if we did get a violent sell-off and we came anywhere below the 618, 6,700, I would get bearish on this overall. We're closing below all these substantial time frames and essentially showing like weakness when we should be showing strength. Now we have been traveling inside of this channel essentially. If you look at this on the daily, you can see we've had multiple touches on the top, and we started putting in bearish divergence here. This was essentially same high on the indicator oscillator, but a higher high on price action, and now we're starting to roll over and showing a lower high, which is obviously bearish as well. So the RSI has crossed back over below the EMA of the RSI, and then if we switch back over to the 4-hour, you'll see we've essentially been traveling inside of this 4-hour channel for the stochastics, and as you can see, that 4-hour channel, essentially we're moving violently now back down towards the bottom of it. If we break out of this channel to the bottom, I would expect first a retest and like move back up, attempt to push back up. But if we break out the bottom of this, this is going to show us that we're expecting to get like that large move to the downside. And then once again, we have essentially like this slope support that we were getting all through here. And then we have the top slope support right here. It was essentially resistance. We broke through it, found support, found support, found support slightly above it. That's going to come in line perfectly with the 50 and 55 moving averages. We also had this triangle top that we were putting in right here. We would expect that to get interaction as well, which is going to be slightly lower than that at the 89. So now we have multiple levels of confluence lining up with those. And then finally, the 200 moving average is going to line up perfectly with the blue support line that we had drawn in here as well. So we have multiple levels of confluence with each of those areas. We have multiple indicator oscillators telling us what's going to potentially happen in the future. The most important thing to do right now is not get greedy with any short positions that we have open, but start taking profits if we haven't already, which obviously, like I said, we've already been entering shorts to cover our spot position, and potentially, expecting a legitimate retrace and then playing it by ear from there. Everything's going to happen first on shorter time frames before it happens on longer time frames, but we would expect essentially like the 4 hour to start telling us the tale of what's going to happen on the daily, and then the daily, essentially telling us what's potentially going to happen on the weekly. So we have quite a few indicator oscillators as well as the actual price action itself. We have horizontals, we have some diagonal slope lines, essentially all telling us the same thing, telling us levels of confluence that we would expect our retrace to come down to. So well, there you have it, guys. Just a quick update. I'm feeling much better overall, just a little bit stuffy, and in the cold weather, feeling a little more than in warmth, but overall, hopefully headed towards recovery finally, and get things back to normal, get back to my daily content, and a little more interactivity with the markets. So there you have it, guys. Crypto Trend Trader, and I'm out of here.